Hello and welcome to today's Delta Credit Tip. So you went and got a 4-year degree and a 4-year bill that's going to take you the rest of your life to pay off, but now you want to get a house. How do you do that with student loans? Well, stay tuned. We're going to fill you in on today's Delta Credit Tip. Hello and welcome back to today's Delta Credit Tip. I'm Michael Holmes of Delta Credit Restoration, bringing you yet more information to help you in your credit restoration process. If this is your first time to our channel, what we do every week is we give you more information to help you build, fix, and propel your credit so that you can accomplish those things that you want. It's not the fluff, it's not the hype, it's not a big commercial, it's the real deal. So make sure you subscribe and hit the bell so that every week as we come out with more stuff, you get it as we get it. All right? But today we're going to talk about student loans. Student loans are by far a financial epidemic for our academic youth. It's not like back in the day. You got to be really careful when you're dealing with student loans because sometimes the debt that it creates isn't equivalent to the value of the paper it's written on. And it comes back to haunt you when you're trying to get things like a mortgage. But let's say you did go out and get that degree. Now you're trying to get a house. Now you've got this student loan payment that's getting in the way. And the way student loans are designed is they're not typically short-term loans. They're big loans that are going to last a long time. So if you have to wait till you're done paying, you may not ever own a home. So the secret to owning a home or getting a mortgage for a home when you have student loans really lies in the loan type that you get. Okay, so when you graduate from school, you're not going to probably use that degree right away if you're like most people. And even if you do, it's going to take a while for you to kind of get things started. So what most people do is they will defer their student loans, or they will create an opportunity where they can only have to pay income-based payment or an income contingent payment. And all of those things dictate whether or not you're going to be able to successfully get a mortgage. And ultimately, it's not the credit score that matters, it's the debt to income ratio. All right? So you have basically two types of payments that you can make with the Department of Education. And by the way, these are government-backed loans only. I am not talking about private loans. Okay? But on government-backed loans, you can either do a fixed payment or a non-fixed payment. Those really are your two options. And in that comes a deferral method, which you're not paying anything. But again, that's not a fixed thing. It changes every year, right? But on a fixed payment, you can have either a standard or an extended standard payment. The extension part being how many years they hold you. They term out your loan, and that's going to be an option based on how much your student loan is. And then you've got your non-fixed payment options, and these are your income contingent, your income based, your deferment, and your forbearances. Okay, so those are the two types that you have. Obviously, these types, the fixed loan payment options, are going to be significantly higher every month. But the problem is that even though the non-fixed payment options may be lower, the way the bank calculates it could be higher. And that's the key. So you basically have 4 loan types that you can get to get a mortgage. You can go FHA, VA, USDA, or conventional. Now, the conventional loan, we're going to put that off till the end. We're going to talk about that near the end. But let's talk about FHA, VA, and USDA. So if you were on a standard or an extended standard payment with your Department of Education loans, whatever that monthly payment is, that's what they're going to hold against your debt to income ratio. But if you were on anything else, any of those non-fixed loan payment plans, then with FHA, what they're going to do is they're going to take 1% of the outstanding balance and then use that against your debt to income ratio. So if you have $90,000 worth of student loans, your monthly payment to them is $900. If you go VA, they're going to take 5% of the outstanding balance and then divide it by 12. So on $100,000, you're then going to divide that, multiply that by 5%. So basically, your payment is then $5,000. You divide that by 12. That's what your monthly payment is. Okay. On USDA, what they're going to do is they're going to take an approach very similar to FHA, and they're going to say, okay, we're going to take 1/2 of 1%, and now that's going to be your monthly payment, at least in relation to how they calculate it against your debt to income ratio. Okay, so depending on what the dollar amount of your loan is, that could be a very significant number, and as a result, cash flow you out of qualifying for the loan because you just simply can't afford anything once they jack your payment up to $900 or $1,000 a month, right? So again, the loan type and the structured payment that you have with the Department of Education is what could bleed you out as far as the mortgage is concerned. But let's talk about the conventional loans. So with conventional loans, there is no government intervention, so the lender can basically make up their own rules as to how they calculate your loan payment. And typically with most conventional loans, whatever the department says, mostly in writing, that your payment is, that's what it's going to be. So if you've got a lot of student loans, our suggestion is always talk to your lender, find out about a conventional loan product opportunity. They have different guidelines as far as what your down payment's going to have to be, about the mortgage insurance that comes with it. So you really want to have an open dialogue with your lender about the different types of loans and what you might qualify for, because you may find FHA just simply isn't it. All right, so hopefully this information is helpful. If so, give us that thumbs up. Don't forget to subscribe and hit the bell so that every week as we come out with more information to help you in your credit restoration process, you get it as we give it, and hopefully it'll help you make a choice, make a change. Delta.